The biggest drag on Tesla right now that has caused it to fall now is Elon Musk. Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. If you're new to the page, somewhere in this video, I want you to hit the like, subscribe, and the notification bell. And if you've been rolling with me for a while, hit the like button. Remember, anything I say is not a suggestion for you to buy, hold, or sell. And lastly, don't fall for spam in the comment section, okay? We're going to take a hard and somewhat unorthodox look into Tesla, and we're going to see why is it tanking. Now, I have been a fan of Tesla. I bought Tesla before the split, and at 700, and it went up to 2100. Took profit, right? But we now know that, well, we even knew then that Tesla was simply overpriced. In a bull market, let's face it, the PE ratios for a stock like Tesla were thrown out of the window because people liked new technology. But in a bear market, like I've always stated, that's when you're called to the principal's office and all of these stocks need to prove their worth. And so Tesla is falling apart fundamentally because it is extremely overpriced and have always been. So let's just take a dive into Tesla and see why I have been telling people to wait. Now, let me start on the front end of this and say that when Tesla was $280, I was telling people that I wouldn't touch Tesla until it got to 185. And I said I will literally start to nibble. But as we could see right now, Tesla is 168. I said I would start nibbling at 185. But things have changed, and I see that Tesla is going to go even lower because we were expecting 185 next year in 2023 during the hard recession. But because of a lot of things that's going on that we're going to dive into this video, that price target is getting lowered, and it's getting lowered drastically because of who's at the helm, and that is the CEO. As we can see, it's been falling all week. Let's go by the month. It's been tanking 20%. Let's go 6 months, still down, right? We have been on a steady fall this entire year and steady going lower as we go out, as we zoom out. Even a year ago, we're still down 56%. Now, I am going to do an unorthodox dive, and we're going to look at some things that is not solely based on how many cars that they're delivering, not their earnings, that type of deal, not their revenue, just on those fundamentals. So we got a lot of pages that's doing that. I could show you a balance sheet and show you where their profits and loss is. That's easy. But let's look elsewhere. Let's look under the hood. As we see here, Tesla, Musk vows to accelerate Tesla's solar and energy storage business in 2022, right? This was ran January 27th, all right? Just wanted to keep you guys abreast on that. Elon makes these bold predictions. He'll say, hey, we're going to double our production in a year. We're going to quadruple it in 2 years. He makes these bold predictions, as we know. And most of the time, if not just about all of the times, he never hits those numbers. Now, that's not taking away his genius, because he is able to do exceedingly and abundantly better than other people in their spaces. So let's take, for instance, GM and Ford. He was able, in spite of the chip problem, to actually quarter over quarter beat delivery estimates that other car companies weren't able to because of the chip shortage. So he's skilled in that area, but he overpromises constantly. Now, this chart is from 2021, and they will be posting another one at the end of this year. And so it just shows you how much revenue is made. So in 2021, as you could see, 87% of its sales was from automotive, not leasing, not energy, not other, 87%. And so a lot of people say, hey, is it just a car company? I, for one, have been saying it's more than a car company. And he was proving that until he wanted to be more popular and not focus on his core business. We'll get back to that in a minute. Let's talk about PE ratios as it pertains to other companies in the EV space. As you can see, General Motors, Ford, which they are just getting started, right? Harley Davidson, here we got Polaris, Fisker, Lion, Volta. Let's look at General Motors. Look at that, under 6%. Ford, 8.6, right? Harley Davidson, 9. But as you could see, if we go to Tesla's PE, price to earnings, it is 51.92. And that is extremely high. Now, in 2020 and 2021, Tesla was able to get away with it because it was a favorite. Younger people were buying it. They didn't care about the price to earnings, what you're paying for the stock, all right? They didn't care about that. They just cared about, hey, it's clean energy. I like the car. It's electric. I don't like gas, that type of deal. So it was more of a movement. And some of us, a lot of us made money off of that movement. Remember, sometimes I like to make money off of the herd. But now we're in a bear market. So now Tesla's being called into the principal's office, and the principal is saying, show me your worth. Before COVID hit, Tesla was hovering around $60. Now this is post-split now, okay? So Tesla was hovering around $60 a share, right? Now we're at 168, and that seems like a lot of gain, which it really is. So let's look at this chart. This is some hypotheticals. All right, let's go back to COVID. Let's go back to pre-COVID. Let's look at what happened to Tesla pre-COVID. So pre-COVID, Tesla was around $64, $63 to $64, okay? Now, I'm not saying that Tesla will end up at $63 to $64, though some may think so, right? And so, of course, COVID happened. And then we had a big green candle here in June. So what happened in June to Tesla? This is what happened to June in Tesla. So Tesla had its best production month ever. So it bounced back from COVID. Let's go back to it. And as we could see, it had its best. So now we're at what? If we look at the candle wick, we're around $80. Let's just say $80. What happened in July for Tesla that caused this big green candle? Well, in July, their numbers were increasing as far as deliveries, and people were on the Tesla train at this point, and the shorts were getting burned, right? Another surge was they got sued, remember? And you say, why would that cause a surge? They got sued because of the accident of the autonomous driving, and it dropped in price. Myself and a lot of you guys began to buy Tesla because we knew the suit was baseless. What really happened was unfortunately a couple of people perished, but they found out that they were trying to do the selfless driving, which was not fully up yet. It's not fully operable now. And they tell you not to use it. But both of the passengers were found in the back seat, meaning someone said, hey, this car can drive itself. They both got in the back seat and let the car drive itself and had an accident. So that suit didn't follow. And a lot of people knew this and started to buy, and it began to run back up yet again. I would feel better buying Tesla at 135 rather than 500 or 350 Will I be buying in the 135, 140 range? Yes, I will. I'm going to DCA, and I don't mind buying it around 135. But I'm going to say this. The biggest drag on Tesla right now that has caused it to fall now is Elon Musk and his inability to stay focused. Out of everything, out of all of the fundamentals, out of the charts, out of anything that you could look at, the biggest drag, if we're honest, is Elon Musk, his obsession with Twitter. Now, when was the last time you heard anything positive about, and I'm not talking about the space program or anything positive about Tesla, what he plans to do with Tesla? All you've heard is he had to sell Tesla to what? Fund Twitter. And it seems like all of his focus is on Twitter. Facebook, Meta Platforms, is going through the same thing. They have abandoned their core customer and they're putting all of their money into the metaverse. And they're showing these stupid metaverse commercials. Well, people got on Facebook so they could post pictures and show their perfect lives. And so that's why Meta is tanking and will continue to tank. And until Elon Musk gets focused, stop playing with Dogecoin, stop playing with his new shiny toy called Twitter, and focus on Tesla, Tesla will have a fair chance. And because of the crackdowns in China, that is going to put a hurt on Tesla's ability to create and sell over there. Their COVID is rising, and unfortunately, that's negative for Tesla. All right. And so that's what I have to say about why Tesla is falling. And I wanted to give you a peek in where and why Tesla will continue to fall. And so I said I will start nibbling at 185-ish. I could tell you right now that has dropped. We have to be able to pivot when things pivot. Let's see what Elon Musk is going to do. If he just says, I'm going to shut Tesla down, my focus off of Tesla and just work on Twitter, then that number will continue to fall, unfortunately. But long term, I'm a Tesla bull because they are number one in the EV market. Unfortunately, as Tesla tanks, so will all EVs go down with it. Tesla will take all EVs down with it. All of your plays, all of your electric charging stations, and all of your electric vehicles. I'm just telling you that as it tanks, it tanks. Now, what I do see in 2023 is some tremendous buying opportunities. I believe that all EV will suffer horribly in the first half of 2023. And that's why we will be dollar cost averaging in and buying when they're beat down the worst. So let me know what you think of anything I just said. Leave me a comment. If I've shined a light on anything, make sure you hit that like, subscribe button, and check out all of my links in the description below. Thank you.